Okay, folks, welcome to Thursday Night Stock Charts Live. What we're going to be talking about tonight are the appointments by President Trump and what it's going to mean to the market. In particular, we want to focus on Robert F. Kennedy, DHS Secretary, and I forget the guy's name from Fox News. Good-looking guy. Forget his name. I'll have it up in a minute. But Secretary of Defense. Two major roles in the administration, but those personalities are going to have a dire impact on the equities that trade within their realm, meaning pharma stocks under DHS, biotechs, all these names they were destroyed today. We're going to talk about food stocks, something I have not been looking at. They've been getting annihilated, whether it be Campbell's, whether it be Kellogg's is no more anymore. I checked out the symbol K. Were they bought out? What's the other one? Kraft Heinz. These names are getting destroyed in anticipation of a new administration. So we'll talk about it. We'll talk about Fed Chair Powell today and his comments. We'll take a look at the probability of a rate cut going into the back half of the year. Looks like Larry Fink, who said a couple of weeks ago, one rate cut left in 2024, that may have been November. Let's get to it. Let's begin with sharing my screen before I forget. And let's say hello to folks. Mr. Pete, welcome. Tim, thank you for the audio check. Same to you, Sean. And good evening to you as well, Mr. Sean. Welcome. Okay. So let's talk first about AMAT. They reported after the bell, and they disappointed. And I haven't looked at their numbers, to be honest with you. I just look at the chart, and I'm looking at this. Knee-jerk reaction up, reality down. This is why you never, ever buy the knee-jerk reaction. The first reaction is generally the wrong reaction. Then when you take a look at these topping tails, what these topping tails on these candlesticks are telling you is that there's a wall of sellers up here at 186 per share. So it's not looking good for AMAT moving into the new trading day. Now, we went short of Microsoft. How'd that close today? I had to step away. Microsoft closed up. We were also short. I know how this closed. AppLovin. We shorted it yesterday, and then I put an advanced order right at, I'm going to go over this later on, right at the upper band of resistance, but we need to be on TrendSpider to do that. And I'll show you exactly where I got filled, and it was perfect because the shares dropped like a rock thereafter. So we're up in this trade right now, down on Microsoft. We did AMAT. We're good to go. Let's say hello to the people here. George, welcome. You got such a fancy name. I feel almost guilty with just saying George. It's like I ought to be saying something extra. It's spelt perfect. Andre, I mean, that's a great name. You must get a lot of girls, man. That's a great name. I'm not kidding either. It's it's better than Bob. LM Visser. Hopefully I'm saying that right. That's my Brooklynese coming out. Good evening to you, my friend. Welcome. All right, let's get to it. Let's talk about TrendSpider. Folks, I don't want to start off with an ad campaign, but time is running out. TrendSpider, get it up to 65% off. This is the Bloomberg terminal for the retail trader. If you want back testing, real-time scanning, I use this all the time. Idea generation, it's kind of like the same thing. Technical fundamental analysis, you can click a button, see how the revenues are going. Seasonality, analyst opinion, if you care about them. Sometimes you do. Insider buying and selling, all at the click of a button. Right here. Right here. Seasonality. Add that. Analysts. Add that. Earnings reports. Add that. Options activity. Add that. I mean, what more do you need? You know what your Bloomberg terminal costs? It's $10,000 a month. Granted, you don't get the real-time news feed that comes through. Well, actually, you do. You do have news that comes. You know what? Benzinga is good enough for me, pal. So if you're not using this, you're trading with an arm tied behind your back. Don't do it. Take advantage of this 65% discount code. Folks, I believe in this so much. I give it away free to our silver and gold level members. So take a look, go on over, link below if you watch this on YouTube, link above if you watch this on, excuse me, link above if you're watching this on Twitter. Right now it's 71%. It's set to go down to 67% on the 18th through the 24th. So that's only in a couple of days. It may not sound like a lot, but a penny saved is a penny earned. All right, let's get to it. Let's talk about economic data. You know, Thursdays for us, this is our time to begin our analysis, not for the remainder of the week. The week is done. You know, one trading day left to go. We know a lot can happen in that trading day, and oftentimes something happens, at least on one of the charts. We're thinking about next week. My mind is on Monday right now. Somewhat of an eye on Friday, but right now on Monday, what am I going to do? How are we setting up? Not on a daily time frame alone, but on a weekly time frame. So let's get to it, because we need to know what the economic data is, because we should be able to interpret from the economic data what bonds should be doing, what the dollar should be doing, what yield should be doing. And if it's not doing that based upon the economic data, then we're missing something. It's a puzzle. We got to figure it out. That's our job. That's what people pay me. They subscribe to the Contrarian Trader for me to figure it out. And I love doing it. So if you don't have the time to do it, think about signing up 14 days free. Get TrendSpider for free, trade alerts, analysis, all that good stuff. Let's get going. NFIB Small Business Optimism. Beat. Good stuff. Wednesday, CPI, as expected. The however here is this. They're not showing it. I think it was on the headline number. Yeah. This is here, the problem. First yearly increase in inflation since March, CPI showed. So the knee-jerk reaction yesterday was to buy bonds, drop yields. Then all of a sudden, at the end of the day, it all reversed. Thursday, initial jobless claims. We get that every week. They're a little bit lighter this week than expected. The PPI, that's the level of inflation at the producer level, that came in about on par with what was expected. They're not letting me link to the year-over-year comparison. Let's see if the headlines tell us anything. Wholesale prices rise again. PPI shows due to stubborn pockets of inflation. So it's not just isolated to rent. It's not just isolated to insurance. It's not just isolated to shrinkflation. It's still more broad-based. And we're going to talk about the why. What is going on out there? We'll talk about it. We'll talk about why the Federal Reserve cut rates. Let's talk about value. Oh, excuse me. You know what? I skipped over tomorrow. Do we have anything coming out tomorrow? Retail sales. some industrial numbers. It's the retail sales number, Empire State Manufacturing Survey. That matters. They're expecting a flat read there. What may goose the market tomorrow is if retail sales come in weak along with the Empire State Manufacturing Index. Really, any combination of Empire State, retail sales, and production. And you have a whole bunch of Fed heads. For whatever reason, they're wargaming something here. They're manipulating the market in the direction with that they want. And I think what they're doing is they're guiding to lower expectations on rate cuts moving forward. We'll talk about that in a minute. Let's talk about valuations in the market. I love feedback, especially when I didn't do. I ask if I did anything wrong, and when somebody tells me you didn't do anything wrong, you did it right, I just glow. All right, so LM, you were saying it right, Bob. Thank you. L stands for Lawrence. It's a Dutch name. Well, great name. Great name. Are you over in Holland? Or are you here in the States? Okay, so Schiller PE multiple. Now, this just updated. So as of last night, we were above 38 on the Schiller PE ratio. For context, as a matter of fact, at the beginning of the week, we were above 38. For context, the last high, the prior high, was October of 2021 at 38.58 relative to the close today at 37.93. So we're very frothy. The Buffett indicator, strongly overvalued. And this is where we're at, folks. It's a Wile E. Coyote moment, meaning relative to a 2 standard deviation move, the equity markets are so frothy, it's ridiculous. But there's euphoria right now. So this can continue for a while. You have a lot of news coming out that can buoy the market. You have a lot of news coming out that can hurt the market as well. You know, we got to take a pause here and talk about what's coming. What's coming is that you have probably not a lot of spending cuts coming. I'm going to modify that a bit. The spending is not going to be spent where it has been typically spent. It's going to go elsewhere towards growth, infrastructure, things like that. Things where you could see a return on investment. Rather than, I just saw Elon Musk post a little while ago. He just found out they spent about almost $600,000 on why chimpanzees throw their feces. And we've heard this. Everybody's heard this, the $10,000 hammer that the government buys. So, you know, a lot of that is going to get axed. It's going to get axed. And that waste has been fueling a lot of pigs at the trough. The benefit is that after the shock wears off and that money starts rotating into other areas of the economy, construction, then we'll see the benefits of that investment. Right now, I think it's a matter of people saying, "Oh, great, we have a new administration. I feel good about that." The question that becomes, does it impact me? Do I work for the FDA? Do I work for a federal agency that is worthless? That's 23 million people that work for the government. So that's a huge number. A lot of them, not a lot of them, a good portion of them are going to be affected. Now, another way of looking at the valuations of the market is not just on price to earnings multiples. You got to look at the big picture. And the big picture here is that on price to sales, we are just off of the 2021 highs. Price to book, we're challenging the 2000 highs. And that's saying something. I was there. I was trading back then, and stocks were really expensive. Adjusted price to earnings ratio. This is forward looking, not rear view mirror looking. You know, we're getting up there. Can stocks move up higher? I think so. But in a moment, we're going to take a look at the weekly charts to identify how we're going to close out the week and how we're going to open next week. All right, so this came out this afternoon, 2:45. Fed Chair Powell warns bumpy path ahead for inflation. No hurry to lower rates. Folks, stop the engines. We need to take a step back here. We need to ask ourselves, why has the stock market been on a tear since mid-2023? It's because of rate cuts, the promise of rate cuts. And we got those rate cuts. Now, all of a sudden, it's, not so fast, maybe not so fast. And you got to wonder, because when they cut a half basis point, I said to myself, granted, the yield curve is inverting or uninverting. We've seen jobless claims pick up, but you're reporting 3% GDP and you're going to cut rates by a half basis point and then another quarter basis point cut. I think that's what more has to do with shenanigans trying to support the incumbent in the White House or his VP. That is what I think he was doing. And yes, Jay Powell is a Republican. That doesn't mean anything. It's like being in a mafia. So you go into the mafia, you swear an oath to omerta, right? The mob above family. You give up your family. So if Powell was a Republican before he joined the Federal Reserve, well, when he signed on to omerta, it's the Federal Reserve above the Republican Party. So he's going to stick by keeping that institution as independent as possible. And the only way you're going to do that is no matter who's in office, you support that president, or else you come under fire. That's what I think he did here. And now he's throttling back. How do we know he's throttling back? Simple. Here's the Fed Watch tool. Last night, the probability of a cut was 82.5. We dropped 21 percentage points like that. And this was lower before I went live. We were down in the 50s. It's since bounced back about a point or so. Buckle up, folks. If you're looking for a catalyst that's going to send this market lower, look no further. Over 11% of credit card balances in the U.S. are now 90 days delinquent. So between 90 days and 120 days, the banks start charging that debt off as bad debt. They sell it off to collection agencies, and that's it. It's gone. And they got to write that loss off because they're not going to get paid by the collection agencies. If they're doing it on commission, they'll get a portion of it back. If they're selling the debt, it's going to be pennies on the dollar, depending upon the age of the debt. I was in that business. So expect a lot of these big banks next earnings season to start reporting charge-offs on their credit card debt. I'm not sure when this is from. It's from Q1 2024. Yeah, so next quarter, these debts are going to be in charge-off mode, guaranteed. Once they hit 120 days, gone, off the books. They're not getting that money. All right, so this is an article off of Zero Hedge. The topic of inflation is back. And Franklin and I, one of our members, were on a live stream the other day, and we were talking about the CPI report, and he made a comment that, you know, the CPI report came in as expected, kind of tame. The yields dropped off initially, and we're talking about it. And he goes, you know what? Do you still get the vibe, though, that inflation is a problem? I said, absolutely right. No doubt about it. I get that vibe. It's like a dark cloud. I mean, that may have been his words, to be honest with you, a dark cloud hanging over us. And so, sure enough, this is becoming a bigger and bigger problem for the markets. The fact that inflation is back, and look no further, and we're going to go to the chart in a moment. Look no further than the 10-year yield, folks. Look no further. Look what happened to gold. And you may be saying, why would gold go down if inflation is on the rise? Well, it's because bond yields are moving up higher. Why are they going up higher? It's because there's an expectation. Where is it? There's an expectation that Jay Powell is not going to be cutting rates anytime soon. So that's why bond yields are moving up higher. They're front running him. They're telling you, you're not cutting rates. They told him the day that he cut rates by 50 basis points, this is not going to continue. Rates skyrocketed. Moving on. I'll skip a lot of this. We emerged from, I don't even know this word, from the, God damn, that's a good word. Miasma. I don't, does somebody know this word? Never saw this word in my life. You bet I'm looking up later on. Of these terrible years and what happens. The newest inflation data appears and it is still awful. Even worse than before, meaning year over year. CPI. All told, the US dollar's purchasing power is down. In official data, they should have made that parenthetical, official data down 22 cents over 4 years. Think about that. So in 4 years, you've lost 22% of your buying power. That's what they'll admit. And here's what it goes on to say. That's what we're being told, and that's terrible enough. The reality is likely worse once you add in interest rates, shrinkflation, new fees, and housing insurance. That gets us closer to 40 cents and more. I'll leave it off with this. Elon Musk summarizes the excess government spending is what causes inflation. Look no further than Milton Friedman to back him up. God rest his soul. All government spending is taxation. Again, worthy of an individual highlight here. All government spending is taxation. End of statement. If anybody ever asks you, what's the hidden tax I keep hearing about? It's inflation. The government spends and they borrow. They send the debt over to the Federal Reserve to buy, and the cycle keeps repeating itself. And we get the tax, and that's through inflation. This is a very important concept to appreciate. It is either direct taxation. If we had direct taxation, they wouldn't get reelected in Congress. Like income tax or indirect via inflation. Who are you going to blame over in Congress except for everybody? Everybody. Due to increasing the money supply. It comes down to the machinery. Here we go. It comes down to the machinery that prints money. Congress authorizes spending, the government mints the debt, and the Fed buys it. That's the scam. That's the scam. And they can't let that pyramid scheme go because their jobs come tumbling down. If you're wondering why the mainstream media is cackling like hyenas right now because of these appointments, they know hell is coming. It's a kind of a good hell because the poison is going to be worse than the disease for a while. No doubt about it. But on the other side of it, you're looking at a healthy economy. We need a shakeout. The result is all existing monetary units are reduced in value, same as when you mix juice with water. Couldn't have said it better myself. So, the theme of tonight is talking about the change that we're seeing this week, and it was forecasted by the 10-year yield saying you're not cutting rates anymore. The bond market told the Federal Reserve, you're not cutting rates anymore. You're done. This is BS. We're talking about inflation. Now we're going to talk a little bit more about catalysts and catalysts that could send the market down. Now that's a tough conversation to have because November is the most seasonally strong month out of the year. December, one of the best. So it's a hard time to say, you know what, you got to dump all your stocks right now. But I'm telling you right now, if they delist super micro, brother, I think you're going to have a sell-off in the AI space that's going to make your head spin. Because if SMCI is guilty of shenanigans, who else in that space is guilty of shenanigans? So, as Buffett always said, you always got to wait for the tide to go out to see who's swimming naked. Guess who's been swimming naked? SMCI, the third largest buyer of goods from who else? NVIDIA. Now let's talk about other areas of the market that aren't going to get clobbered. They are getting clobbered. Trump nominates RFK Jr. for HHS secretary. I used to hate this guy. And the reason was, and I love him now, the reason is that he was very, very left-wing when it came down to environmentalism. He did a great job when it came down to suing GE for the PCBs up in the Hudson River. But he was really left-wing when it came down to his ideas. So while I like him quite a bit now because now he switched his focus onto health. And I happen to be big into what you're putting in your body, how these companies are allowed to poison us. The COVID scam, I saw from the very beginning, I said, this is a grift, the grift of all grifts. There's no way you're shooting me up with that junk. No way. When somebody tells me it's 100% guaranteed effective, yet you just made it up a couple of weeks ago, I know I'm getting scared. So this guy's coming in and he is going to get his pound of flesh. Because remember, they killed his uncle and they killed his father. He's going to get his pound of flesh. His Uncle Teddy, that guy was a loser and a half. So here's Campbell's soup. And we all see this, examples of this, but it's insanity. Here are the ingredients here in America. Here in America, the worst form of garbage. Here, glucose syrup, dehydrated garlic, monosodium MSG. You ever want to go to sleep after you eat Chinese food? It's MSG. This stuff here, salt. And here's what they do. They'll label things twice. They'll label salt. And then what's next? Potassium. Aren't those the same thing? Maybe one molecular structure away from being the same thing? Then you go over here to Australia, down under. Vegetables, 80%. We don't even get a percentage. Tomato puree, 29%. I don't know how that's over. I guess it's tomatoes and vegetables overlapping because that's over 100%. What else do we have here? No seed oils. It's food. It's food. It's crap. It's crap. I haven't eaten a can of soup in years. It's crap. Oh, I hate when this happens. So how is old Campbell's soup doing right now? I decided to check in. Here's that chart. My guess is around the time it appeared as though the polls were shifting in the favor of Trump, this thing rolled over and rolled over hard. How much are we down in the month so far? Folks, this is a do nothing stock, and it's down nearly 4.75% on the month. And I think it's going a lot lower. Kraft Heinz, weekly chart, down over 3.5% on the week. Look at this rounding top on Kraft Heinz. Look at the lower high from back here. Take your crayon out. You want to see a downtrend? This is the Pimp Mac Daddy of downtrends. And guess what? We're about to close on a monthly time frame down below this lower band of support. If you're thinking about buying this dip, be very, very careful. Because I'm going to be screaming, short it. No, it's got my alphabet wrong. There we go. Okay. What else is going to suffer? Biotechs. Look at this outside reversal bar. This was setting up for a beautiful rally last week. Outside reversal bar. Horrible, horrible price action. This is as a matter of fact, Trader Isaac asked me to do this as a watch stock going into the new trading week. I'll freely admit, I said this thing looks great. And what happened? We're down 6%. Because take a look at how this looked. There you go. Look at that. Beautiful bull flag setup. We're at the lower band right now, but we're threatening a breakdown below it. So bad stuff. Very bad. Looking at the Dow Jones, I don't know why this is doing this tonight. The Dow Jones Pharmaceutical Index, weekly chart, down over 3%. On the month, down over 4%. And we're what, midway through the month? This is going lower. mRNA. I was at the gym the other morning. They reported earnings. The shares were moving up higher. But they gave up all those gains. And we're down below the pre-COVID, right before COVID. Are we down below that mark? No, we're not. Not yet. But I think we're gonna. They're probably gonna rally this. This is pretty oversold. But ultimately, I think that's where it's gone. Because remember what's going to happen here. The Faucis of the world. You have Matt Gaetz that's going to be in charge of DOJ. I'm a big fan of Matt Gaetz. The reason why I'm a big fan is because he is a tough, smart son of a gun, and he is pure MAGA. So these companies, if they pulled any shenanigans, he's going to be on them like white on rice. Let's check in with good old Pfizer. Their CEO is probably trying to seek asylum over in Davos. Look at this train wreck of a chart. On the month, down 6.63%. You want to avoid these names like the plague. Now, moving on to other areas where you don't want any part of right now. His name is, I don't know his first name. I forgot it. Hegsworth. Pure MAGA. Pure smart guy. Going to be in charge of defense. And I watched him interview the other day. And he was on a podcast and he was talking about how the Pentagon he's a really smart dude, really, really smart dude. They're gonna make him out to be, meaning the left wing media, they're gonna make him out to be an idiot because he's only on Fox News on the weekend. No, give me a break. The guy's really smart. He was talking about how we're positioning for fighting the last war with China. China is positioning for future wars, cyber, etc. So, what his comment to the interviewer was, in the age of hypersonic weaponry, what the hell are we going to do with 10 aircraft carriers if they're wiped out in the first 10 minutes of battle? What are we going to do? What's next? So, granted, he's not at liberty to see what's inside of our arsenal yet, and perhaps he'll change his tune a little bit, but he is not into big ticket items that are traditional tools of war. And when you take a look at the Aerospace and Defense Index, now this is a mixture of commercial as well, but down on the week about 3%. And when you take a look at LMT for more of a macro view, outside reversal bar, down 4.5%. Lockheed Martin getting destroyed. Boeing, I know somebody just mentioned Boeing. I own Boeing. And this is guaranteed on the news of this pick for Secretary of Defense. Now, to be fair, it was going down before his announcement, but that stuff leaks. So Boeing looking not so good. What else do we want to talk about here? Do we have time to go over? Yeah, we do. Let's go over the weekly charts. All right, let's begin with the bullish percent index. So we look at this for sentiment. Are we extremely bullish? Are they extremely bearish? We're in the middle ground here. So nothing really to talk about per se that's concerning long short wise. Yield curve, weekly view. Is this updated? No, this is not updated for today. CNBC is probably cleared right now. Oh, no, it's still there. Good. 2-year was up. So the yield curve pulled back. We're probably flat on the week right now. CRB commodity index. This looked bullish last week. It's since faded. That's a good thing. Bonds getting destroyed. I have a position in bonds. My worst position so far. Down 2.33% on the week, a little bit more than that. Daily chart, inside bar today. Good volume. We'll stick with it for a while. Yields, one trading day left to go, but this is a breakout. If they close up tomorrow, this is a breakout. At some point in time, Yeah, we broke support today. At some point in time, something's going to start happening to try to bring these yields down. I'm talking from the Trump side. Tips, weekly chart, very weak, implying that we're going lower. So how do we interpret this when we look at this? Well, we interpret it as that if you have no bids for the tips, that means that you're not afraid of inflation. So what are they? The Treasury inflation protected securities. You buy them to hedge against inflation. Right now, nobody wants them. So you're going to buy gold? No. If nobody wants tips, they're not going to want gold. So actually, to be fair, I put on a long trade small using a futures contract of gold this morning when it hit a price point, and it bounced. The dollar ridiculously extended. And this is one of the reasons why I put on the long bet on gold. Here's a daily chart. We're so elevated relative to the third standard deviation Bollinger Band. It's ridiculous. And I don't think this is an indication of how strong the U.S. is. I think it's an indication of just how weak Europe is in particular, and along with Japan. What sectors do I like? Cash. Cash right now. I don't want to add to shorts. I like some opportunities in the mid caps and small cap arena. Like what do we put on? Datadog. We did well there. We did well with the what the heck is it called? The software ETF. So, we have some good trades on, but I've been flirting more and more with the short side, Microsoft, AppLovin. So I'm edging in on opportunities that I think are good opportunities to the short side and keeping a lot of cash on the sidelines. What is wrong with gold? Gold is a proxy for inflation right now. It's just telling you that it's not that inflation's coming down. What gold is telling you right now is that there's going to be proactive efforts on the part of the Federal Reserve to fight inflation because the bond market is telling you so, and it's telling the Federal Reserve you're gonna stop with this nonsense because that's the only way you're going to get inflation under control. You keep cutting yields, you're going to send inflation through the roof. So the bond market has smelt that out. Now, am I bearish long-term on gold? No, not at all. Which are the best sectors to buy? Well, it really depends upon your time horizon, Michael. You need to. Everybody's got their different goals. You're at a different stage of life than another person that would ask me that question. If you own Pfizer because you're living off the dividends and that's working for you, fine. You may want to consider selling some calls. I would stay far out of the money because you're going to get counter trend rallies if you don't want the shares taken away from you. Use 20 delta, 15 delta covered calls going out about 45 days and just generate additional cash flow on top of that $840 in dividends. That's another thought for you because right now the path of least resistance for Pfizer is down. Or you may want to take a look at other names that are doing well in the same space. Altria just made a new 52-week high. That's doing well. Are they going to be safe under the new administration? I don't know. But if it's working for you, stick with it. I don't know your goals, and it would be very, very wrong for me to say what you should do. I can tell you what my opinion is on the stock at this snapshot in time, or where I think it's going to be this time next year. But for you individually, we need to sit down for a couple of hours worth of a discussion. The euro weekly chart absolutely destroyed this week. They are a train wreck. Yen down 2.5%. This is the reason why the dollar is going up. Bitcoin, lots of chopping action here. I don't think that this rally is done. I think that it's longer term going to continue up higher. I think that right now what you're seeing is a great, great opportunity on any pullback to add more. If you're dollar cost averaging in, as I am every Monday, I buy a little bit. I buy a little bit. And I also on the side, I'll give you a hypothetical. I'll put $100 comes out of my checking account, goes into SoFi. $50 goes into cash, $50 goes into Bitcoin. And when that cash hoard fills up nicely and I get a nice pullback and a reversal bar on Bitcoin, I take that money and I buy a big clump of Bitcoin at a good support level. So that's something you may want to consider doing because it bought my new driveway. It bought my new walkway the last time I did it. So now we're rebuilding that. Daily chart. All right, so we got a bearish reversal day today. This is ridiculously expensive. Let it come in. No reason to go buying this right now. You're going to get better prices. The rally's not over. Short term, maybe, not longer term. Volatility, weekly chart, 4.22%. Down on the week, daily chart. You know, we managed to close up with a bullish reversal bar. Did we close above support 14.25? We did by 6 cents. You heard of 50 cents? 6 cents. Okay, I tried. All right. The Dow Transports, a major, major breakout last week. Follow through this week. I got to say, I like this. I like it. I own CSX. Somebody asked me before, what do I like? I like transports. Look at this. This is the monthly chart of the Dow Transports. Mama Lucian, you got to love this. This closes up like this. You know, granted, we may get a check back next month or in January, but man, this is a major breakout on the Dow Transports. This can't be ignored. Yeah, let's bring up CSX. We own this. We owned it for a while now. This is getting ready for liftoff. On the month, up nearly 6%. Stagio Railroad. But sometimes stodgy is good. And it throws off a teeny-weeny dividend. Dow Jones Industrial Average, weekly view, down 0.5 percentage point on the week. A bearish key reversal if we close at the lows of the week. What does that mean? Sellers above. It's taking profits. S&P 500 weekly view. Bearish key reversal. Hey, TZ Burton. No worries, brother. Talon, welcome. Thank you. Yes, please. We have 38 people on. If I can get 38 likes plus, hit it twice if they let you. Thank you very much. It helps me out with the YouTube algorithm. Let me get back to duty here. So S&P 500, one thing I want to point out, and I haven't spoken about this. We've been in a downtrend channel on RSI for quite a while now, while we've been putting in higher lows. That's a bearish divergence. Daily view. We broke support today. I thought we would get a follow through. We didn't. Volume, very light. Let's go to a 30-minute view. See how they have us set up for tomorrow morning. Ugh. Not good. We broke support. On volume. Skip the equal weighted. Let's go to the Qs. Down a percentage point on the week, daily view. Broke support today. They have one day to check us back and get us back above 510. They don't keep us above 510. We're going to retrace all of these post-election gains. Small caps. Let's bring up IWM. This is a leveraged product. Now, I got to be honest with you. I've been shocked that the small caps have been able to rally with yields moving up so high because they're more exposed to, or they're more sensitive, I should say, to higher yields because they have to go to the bank and borrow money. Apple doesn't need to do that. They can float a bond. They can issue shares. They can do whatever they want. They have cash. They don't need to do anything. So, yeah, we got extended here. Expect a pullback. Once yields start coming down, I think small caps and mid caps are going to lead the way for the next couple of years. And emerging markets. As long as the dollar comes down, emerging markets. The banks, they're down a quarter percentage point on the week on volume. Technology. We may have a failed breakout if we do not break out. Oh, excuse me. If we do not rally tomorrow, this could be a failed breakout on technology stocks, semis. They have been lagging. This is a really bad lag. And I'm not going to put up another line. It gets too noisy, but you get my drift here is that we are flirting with a breakdown. Even RSI is validating that now. Volume's light. We have NVIDIA earnings coming up soon. That's probably going to be the tail of the tape. Let's go to a daily view here. Up today. This was a beautiful W formation, still intact. It could still break out. The software ETF, this is what we owned. We sold this. We made profits real. I did leave some money on the table, though. I should have held on to it longer. Volume, strong. I may just sell some premium against this, maybe sell a call spread tomorrow. We did biotechs, staples, reversal week, discretionary, filled candlestick. Let's go daily view here. This is 20% Amazon, 12% Tesla. Tesla took it on the chin today. Discretionary down 1.42%, closing at the lows of the session. Emerging markets getting destroyed because of rising yields, but more importantly, rising US dollar. That's like a tax on emerging markets because they have so much debt. Emerging markets with China. This was ex-China. Emerging markets with China. Down 11.33% on the week. This is a leverage product. This is a 3 times move. So it's like 4%. That's a big move. And it's going lower. Energy. I'm not understanding why energy is rallying here. To be honest with you, energy didn't thrive under the last administration of President Trump. It did okay, but it didn't thrive. So I'm not sure why it's going to do great this time around because he wants to drill more. And even OPEC is saying that, there's not a lot of demand out there. So does this hold up? For this to hold up, you need natural gas moving up, you need oil moving up. So let's check in. Let's see how they did today. West Texas Intermediate crude on the week, it broke down. At current, it's breaking down, one trading day left to go. This is not bullish for energy stocks at all. Let's check out the day. Struggling here. Bounced off of support, but struggling. Natural gas. Oh, excuse me, gasoline. Then we'll go to natural gas. Gasoline's rolling over. It's good. It's great. Puts more money in the pockets of people, but looking at it from a trader, looking for an opportunity in the energy space, this is not validating. These charts are not validating the bull case for energy stocks. It's simply not. Natural gas, still up on the week. This is Boyle. Let's go to UNG. UNG still up, but on a daily chart, I mean, these are down nearly 6% today. It must have been a nat gas inventory. Well, it is Thursday, 10:30 a.m. Eastern Standard Time, nat gas inventory. So that's probably what did it. We own this. FLNG doing well. On the week, up 7.33%. Good stuff. All right, let's talk a little bit about gold. So I think that gold, let's see how we're doing with our gold position. So gold, we bought it right here. When I woke up, I'm up at 4. So overnight, they destroyed it. Here was my support level. And I saw them bidding it back up. I threw on a contract. So we're up on this trade at current. Now, I'm just in this for a couple of days. I'm going to be out because I don't think the damage is done here. Possible higher low. Possible breakdown. I wouldn't do anything with it right now. I want to know if we break out above this resistance level. That's it. Then I'll buy more. I'm not going to hope that it's going to go up. I only want to buy more if and when we close above resistance. So gold weekly chart down 4.5%. It was down on the day, but remember, I bought it pre-market, so it rallied off the lows of the day. Gold stocks just destroyed this week. We sold our gold mining stocks, well, half of them anyway. Book profits right here on this filled candlestick up and into the third standard deviation Bollinger Band. So every time you hear me talk about filled candlesticks or the proximity of a stock or an index relative to its third standard deviation Bollinger Band, this is why I pay attention to these patterns. And sure enough, we have been annihilated. I would have left a lot of money on the table, a lot of money. That's in cash right now. We're going to be looking to rebuild this position. Not quite yet, though, because we're oversold on a daily chart, but the weekly chart is still weakening up. I'd like to see this overshoot down to 44, and then I'll dollar cost average back in, and we'll rebuild that position. What else we want to talk about? Palladium. This is another one where we sold right up here, destroyed. You got to know when to get out, especially with commodities and cyclicals. These are not long-term holds. You trade them. And once they get overbought, get out because the sell-off is horrific. Let's do some chart requests. Where is, there we go. Folks, don't forget about TrendSpider. Just a reminder, they had that 71% discount. That's going to end soon. Link below on YouTube, link above on Twitter. Let's talk about some stocks that people are watching. They want me to go over. Now, Chrome is frozen only when I'm live. Let me take a sip of water, calm down. All right, here we go, coming back to life. Come on, Chrome, you can do it. There you go. All right, I know I posted. Okay. I don't have any requests. Uh, all right, so something happened here. My latest activity. Why is it not showing my guys? Did you not get an alert for me to take a request tonight?
This one curl is the reason I started my wavy hair journey. When I found Pros, I was desperate for a solution for my frizzy waves. I just wanted to be like the natural hair girly that I saw.
Okay. I know I posted it. Yeah, here's Tim. Why is it not showing? Well, that's from Sunday night. Maybe I didn't send out the alert. No, 1 hour ago. BA, all right, we'll do BA again. We'll talk about support levels there. TGTX. The feed is messed up. TGTX. SOUN. And BA. And we'll call it a night. Okay. Let's begin with BA again. For disclosure purposes, I own a position here. And go to a weekly chart. Let's clean all this off. All right. So BA remains in a downtrend channel. Stiff resistance up at 164 per share. We closed at 138 per share. Bloodbath. Resistance above 152.07. Volume pretty heavy. We're trading down below the 200-month moving average. That is so bearish. Charlie Munger once said, if you ever trade down below this is a 200-week moving average, you should buy stocks. Well, we're there. We're below it now. So, Charlie, from your lips to God's ears. Uh, we're bouncing off the lower band of the downtrend channel. I'm not going to sell here. I'm not going to buy more yet. When would I buy more? I guess is the most appropriate thing, because I certainly wouldn't short it, because you have too many new things going on over there. And I would buy it once we get down to this apex down here. Unfortunately, that's going to be the low 130s, if not the high 120s, and wait for the breakout on Boeing. Right now, it's dead money. I thought it was consolidating back here. They threw the kitchen sink of bad news at the company. They resolved the strike yet the shares went down. Why? We now know it's because of the Trump administration and the new stance on the military. And it's the right stance. But unfortunately, it's going to cost me a couple of bucks in the short term. Longer term, I think they're going to benefit quite a bit from the new administration. Growth. Everything does great in a high growth environment. So longer term bullish, short term bearish on Boeing. Where might there be support? Let's overlay the automated trend lines. We closed below today, weekly support. Let's see if we bounce back tomorrow and recapture it. Let's see if there's any monthly. There are no monthly support levels below. So we're probably going to press lower here on Boeing. TGTX. Let's take these off. All right, we blew right through the rising up trend channel. This is take your money, go on vacation, take your wife to dinner, do the right thing, because this is a reversal pattern. It's topping action. And the not so ironic part is that we've been here before, right there. So you have a supply zone above. You got to wait till you get down to a support zone right down here. So I think you're going to need a pretty healthy retracement on the stock. Yeah, this is a daily chart. Big reversal day. Book your profits, make them real, go on vacation, and more importantly, take your wife to dinner. Buy her flowers. Take advantage of the capital you have on hand right now while you still have it. Buy some goodwill. Avoid this stock. I would not short it. SOUN. Soundhound. So they reported really good numbers. We're still long. They're down on the week. They got extended. But I like this as a longer term bet. I am totally into the conversational AI. I think it's the future. I mean, this company here is leapfrogging ahead of competition in terms of their product development. I mean, it's like you're talking to a human being. So I'm bullish on the stock longer term. Am I a buyer right here, right now? I would average in. If you think that the small caps are going to pull back further, which I do, then you're probably going to get a retest back here of a support level. Where might that be? $650. Maybe you want to see a retest of that next week, then a breakout. But I would just average in. That's all. It's a good stock, high quality stock. Let's take a look at Datadog. We bought this the other day on a Bollinger Band squeeze. We're up again today on it. And the Bollinger Band squeeze is still alive. Still looking good. The only question is, does the market hold up? Larry, did you have a problem with did you not get an alert for the request tonight? Sean, you too. Because I think I'm losing my darn mind. I thought I placed a trade in that forum yesterday for the short on app 11, and I didn't. And now today, I can't find the request for members to enter their symbols. I know I did it. Maybe I'm losing it. Anyway, Palantir, great company. Can't take anything away from this company, but you gotta walk away right now. I wouldn't buy it. If you're a long-term investor, sell some calls. Let's bring up the 3D Bollinger Bands. I mean, there's no way you want to initiate a new position. I wouldn't add more here. If NVIDIA disappoints, and they can still beat on revenues, earnings, and still the stock can go down. So there's a catalyst out there. I call it NVIDIA, and I also call it SMCI. If SMCI gets delisted, you're not going to tell me there's not going to be ripple effects throughout the entire AI space. This company is going to get impacted. So I'm bullish on the stock longer term, but down here. I'm looking at a very low 50 handle on Palantir, ideally an overshoot down to a 48 handle. I'm a buyer at those levels right now. I'm an innocent bystander. No, I would not short this stock. Folks, thanks for being here. Like, subscribe, you know the deal. Don't forget, TrendSpider, 71% discount, and I give it away free to our silver and gold level members. So if you're busy every day, you don't have time to do your analysis, leave that to me. I'll do it. I'll do that analysis, and I send you out my videos each night telling you what I think about the market, what it did that day. And on Saturdays, I send you out my commentary about my thoughts for the week ahead. What do we like? What don't we like? Where do I think the market is going? So if you're not currently a member of the Contrarian Trader, sign up. It's 14 days. What are you going to lose? Free. And get TrendSpider for free. Silver and gold level members only. Have an awesome night. Profitable trading day tomorrow. And have a great weekend. Be well.